Good morning XRP community. We begin with a new headline that cut through a quieter day for tariff talk. A risk watchdog tied to the G20 has warned about the possibility of market-wide financial stress. It's a reminder that, beyond the noise of a trade spat, global authorities are watching the same vulnerabilities many of you have flagged for months: liquidity strains, interest rate aftershocks, and the need to modernize the financial plumbing. Here is the picture at this hour. Crypto is mixed but relatively calm. XRP is trading around $2.59, up roughly 3 to 4% on the session. Bitcoin hovers near 114,000. Stellar sits close to 34 cents, and Hedera is near 18 cents. Across majors, the rebound from last week's shock has slowed, with BNB still showing relative strength while several other assets struggle to reclaim prior levels. In short, the market is trying to stabilize, but fresh, decisive inflows are still limited. Asia will be important in the next cycle. The Hang Seng opened lower in recent trade, highlighting lingering caution in regional equities. European and US sessions were orderly today, but Asia's open can quickly reset the tone for digital assets. We'll be watching whether today's measured mood holds when those books turn over. Back to the lead. The G20-linked warning speaks to broad financial stability, not a single asset. It highlights that the system remains sensitive to rate policy, funding costs, and geopolitical shocks. That message arrives as payment networks continue to move toward ISO 20022, the global messaging standard banks and market infrastructures are adopting, alongside growing interest in distributed ledger technology for speed, transparency, and cross-border connectivity. In that discussion, industry documents and consultations frequently reference collaborations with fintech providers, and projects like Ripple and Stellar are often part of that conversation: wholesale corridors and institutional rails on one side, retail and remittance use cases on the other. There is also momentum in stablecoins. Aggregate supply has pushed toward record territory this year, signaling steady demand for digital dollars as settlement tools. That doesn't settle any regulatory debates by itself, but it underscores the direction of travel: more digital value moving faster, and a stronger need for standards that systems can share. A brief XRP note: on-chain trackers have flagged small escrow relocks, on the order of a few million XRP, over recent days. These are modest amounts in the context of total supply, but they do appear on the ledger and are part of the monthly housekeeping viewers often ask about. We'll keep noting them as they occur. Tell us in the comments whether you want a focused explainer on how ISO 20022 messaging, DLT rails, and stablecoins fit together in real-world payment flows. If enough of you ask for it, we'll publish a plain English segment this week. For Bitcoin, the tone remains cautious. The price is well below levels from earlier this month, and traders are looking for signs of stronger demand into the US close. The widely discussed whale short from last week is still cited on social feeds. Some trackers reported a recent transfer of coins to a centralized exchange by the same entity. We will continue to treat those address-level reports as observations, not conclusions, unless exchanges or official records confirm intent. Policy headlines have cooled since the spike in tariff rhetoric, but they haven't disappeared. China announced updated rules around port-related fees that affect US shipping, and officials on both sides have left room to adjust their stance. That is why the G20 risk note matters. When policies shift quickly, fragile parts of the system feel it first. Markets prefer predictability. Sudden changes in trade, budgets, or data calendars can amplify routine volatility. Let's step back. The story we're tracking has three strands. First, a stability message from a global forum: vulnerabilities persist and should be taken seriously. Second, a steady march toward modern financial messaging and ledgers, where initiatives regularly mention ISO 20022 and, at times, include firms working on XRP and XLM-related solutions. Third, a crypto market still searching for conviction after last week's purge, with XRP holding in the upper $2 range and waiting for clearer direction. What to watch next as Asia opens, equity futures across the region, gold's behavior near recent highs, and whether crypto volumes expand on green hours instead of fading. For XRP and XLM specifically, we'll monitor whether today's bid survives the handoff into the next session and whether any new public statements emerge around payment pilots or standards adoption. If official documents or agency updates move the story forward, we'll lead with those in our next bulletin. Before we close, here is what is confirmed today. A G20-linked risk body warned about the potential for broader financial stress. Crypto traded calmly relative to last week, with XRP near 259 and Bitcoin around 114,000. Asia's equity tone remains cautious. Stablecoin supply trends are firm. Small XRP escrow relocks were reported on-chain. Those are the facts we can state plainly as of this broadcast. Share your view below. Does the G20 warning change your outlook for the next few weeks, and which single metric do you want on screen in every episode? ISO 20022 milestones, stablecoin supply, or Asia equity leads? Your votes shape tomorrow's rundown. Thanks for watching. We'll see you in the next update.